Good morning, everyone, and welcome to the European Crossover webinar. And welcome to FOMC Day. And probably relatively quiet because of that. We'll take a look at where we stand here with the euro. And the euro's been just gently going down, just a little bit lower over the last few days. Cable took a little bit dip. We posted this little mini hammer. Aussie and Kiwi, especially Kiwi, have just been very quiet overall. Look at Kiwi, just dead as a doornail in this tight range. Dollar CAD just kept on dripping to new lows. Here we are, really at the bottom. Peso, fairly quiet after this big frenzy over the last 2 weeks. Dollar yen is still hanging around near these highs. Still believe that we're going to get up to that weekly level we discussed, which is 957. And on to the dog of all dogs, the dollar. We're kind of working a little bit higher. I already did the analysis on that, and just a quick brief take on that is we're probably open to now start to move a little bit higher. I can't wait to hear the people who've been calling for a stronger dollar say, I told you so, when they've been saying, I told you so for nearly 3 months. So I guess now we're open to moving a little bit higher potentially, which really doesn't mean anything because you really, at this point, we've already built a little bit of a base here. I mean, quite a bit, actually. So it could move a little bit higher. We'll see how things fare. And we can take a look at NAS and ES. And we had a pretty good little run here at NAS. There's a 2 hour. We started out a couple of days ago on the weaker side, and then we stayed that way until very, very, very late in the session. We finally broke out, and then we extended that to see a run in Asia and into Europe, and then we even pushed even further into the US session. And I would have thought the most it could have got to would have been here, 31186. They still went beyond that, and they actually made it all the way up here into this 3286 area. You can see that here on the daily where we got above this 3185. I thought that was going to be huge. If they would have closed above it, they would have been pretty key. But I'm just saying is that was huge even when they got beyond that. And then we saw this thing pull back, and as the day went, I think we had a case of a lot of stuck longs, and then we just started dripping back, and I guess it spooked some people. We're kind of quiet here. I think this 131186 is going to be key. I think the market will have a tough time. Be pretty key if it did close above that. Look at the SPOOs. They're on the 2 hour. They did get above to all-time highs, but they didn't do a whole lot with it when they did get up to all-time highs. And then we were able to pair back, and then YM stayed relatively weak throughout the day. And Russell, same thing here. That's been going south. We'll take a look at what's on tap. Today should be St. Patrick's Day, so happy St. Patrick's Day. And we do get the Eurozone HICP in about a couple hours. Of course, like I said, we have daylight savings time already here in the States. I think it doesn't come to Europe for another couple of weeks. Then as we move into the US data, we'll get building permits and housing starts, as well as Canadian CPI inflation. That'll be at 8:30 Eastern. Of course, I'm not expecting a whole lot to get going until we get to Fed funds. I'm really not expecting a whole lot. I think for some reason, people are thinking that, Powell's going to say something. I really don't think so. But there was that thought. And we'll see what happens. I just don't really see that happening. My guess is I think we're going to kind of like jump back up in here, but then we won't be able to do anything with it, and then it'll come off. We'll see. Although I don't think you have to rush in so quickly. I mean, if it does jump up in here, my guess would be anybody that's long would probably want to take profits, but I think you have to just be careful, see what he says. We could get a move that goes up, then down, and then back up, and then we start squeezing people. Next thing you know, we're filling this shit up in here. So I want to trade that cautiously. We'll go into the news. Aussie dollar, New Zealand dollars tread water ahead of the Fed meeting. God, I think that's about the same headline it was yesterday. The Aussie and New Zealand dollars were steady on Wednesday, with currencies generally treading water ahead of the U.S. Federal Reserve meeting, where policymakers are expected to reiterate their dovish policy despite rosier economic projections. The Aussie dollar was flat at 77.46, drifting away from a recent one-week high of 78.01. The Kiwi was mostly unchanged at 71.93. Economists expect the Fed to forecast the U.S. economy will grow in 2021 at the fastest rate in decades, with unemployment falling and inflation rising as the COVID vaccine campaign gathers pace, and a $1.9 trillion relief package washes through the households. Financial markets are pricing in 3 interest rate hikes through 2023, mid-2023, and would be on the Fed's dot plots, which signal the outlook for rates. The Fed has kept interest rates pinned near zero for the past year, which has promised to keep them there until the economy reaches full employment and inflation has hit 2% and is on track to exceed that pace for some time. Another factor to watch will be Jerome Powell's pushback on long-end bond yields, says Chris Weston, Melbourne-based strategist at Pepperstone. Could be entering a realm where the Fed allows the market forces more independence. Global bond yields late last month on optimism about a faster than expected economic recovery, world over bets. Major central banks would soon step back from their dovish positions. The RBA last week dismissed the rate hike talks while recommitting to its 3-year yield curve control target of 10 basis points on Tuesday. Minutes of the meeting, March 2nd meeting, showed policymakers were not expecting inflation and wage growth to rise material before 2024 at the earliest. On Wednesday, Assistant Governor Chris Kent reiterated the RBA's lower for longer vote, our view, while signaling monetary policy will be used to control asset prices or asset gains. Dollar firms as investors keep an eagle eye on Fed guidance. The U.S. dollar held against major currencies on Wednesday as investors looked to the U.S. Federal Reserve's policy meeting for indications it could start rate hikes earlier or let bond yields rise further. Against the yen, the greenback firm to 1 basis point or 10 base 0.1%, 0.10% to 108.85 yen, 108.08, I mean to say. Hovering near the 9-month highs of this week, the euro was flat versus the dollar after declining in the past 3 sessions, with Fed policymakers expected to forecast U.S. economic growth in decades in the wake of the COVID vaccines and the stimulus. Market participants will focus on cues that the central bank can start raising interest rates in 2023. It's likely that the FOMC's economic forecast will acknowledge the improved growth and picture this year, but will continue to show a long road towards conditions consistent with the maximum employment and would put sustained pressure on inflation. The Fed, being more dovish than expected, would suggest U.S. yields and the dollar would move low in the near term, particularly against risk currencies, but we continue to see the upside risk in the dollar in second quarter. The dollar index at 91.90, having risen in 3 state sessions, or on support from mainly elevated U.S. bond yields. Europe's medicine watchdogs will release the results of its investigation on incidents of bleeding and blood clots and low platelet counts in the recipients of AstraZeneca's coronavirus vaccine on Thursday afternoon. Depending on the outcome, it could hurt Eurozone's business sentiment further, and the euro could face fresh selling pressure on low vaccine theme, said Daisuke Uno, strategist at Sumitomo. First pound was down 1/10 at 38.86 in Asian trade on Wednesday. The currency has come under pressure from profit taken, having hit a near 3-year high last month on the back of a vaccine rollout. So with that, we're going to move into the analysis. And we're going to have wider ranges today because of the Fed. The euro continued its drip lower ahead of FOMC. Support on Wednesday will be 1844 with resistance at 1985. I don't think we're going to see anything dramatic, but we're just allowing for a pretty good wide range. I mean, probably that is even a bit of a stretch, but that would come in right there. So 1844. Onto cable. The cable paired back on Tuesday, finishing the day with a mini hammer ahead of FOMC. Support on Wednesday will be 37.69 with resistance at 39.58. So wide ranges are going into this FOMC. The Aussie's been edging lower over the past 3 sessions. Support for Wednesday will be 76.70 with resistance at 77.88. Onto the Kiwi. And we're moving through because we haven't moved that much. And on top of that, like I said, we are going to allow for wider ranges because of FOMC. The Kiwi has been mired in a tight range over the prior 5 sessions. You can certainly see that. Support on Wednesday will be 71.01 with resistance at 72.52. So as you can see, fairly wide ranges. It'll be interesting what comes about. On to the dollar CAD. Dollar CAD remains relentless with its onward push lower. Support on Wednesday will be 24.05 with resistance at 25.35. On to the dollar peso. So the dollar peso has gone stagnant compared to the wild sessions of the prior 2 weeks. Resistance on Wednesday will be 20.78 with support at 20.44. Same thing. I don't really look for a move that much into this area and beyond, but once again, we're just going to allow for some wild activity following FOMC. Onto dollar yen. So the dollar yen is holding in a tight range with a bid, I should say a solid bid. Upside resistance remains the weekly level of 957 with support at 835. Weekly level is still going to remain, and I think the potential we can get there. We'll go move into the cash dollar index. So the dollar index is holding a bit higher. The pair has been oversold since Moses crossed the desert. Big deal if it moves higher. No doubt that will be accompanied with a bunch of I told you so's, the same bunch who have been looking for a rally for nearly 3 months. A move above 92.68 is a possibility. For Wednesday, resistance will be 92.51 with support at 91.43. And on to the cross rates. No change here. Look at this. Kiwi yen is just dead in its tracks. Look at that. No changes. And 77.39, 78.71. No changes. On to the euro pound. Oh, we are starting to press a little bit low. Look at this. Still dipping lower. We have 85.35, but wow, we are still pressing down here. We'll just update this to go to 85.31. Actually, no, we did have it. Look, we were doing a little bit better. So actually, we have pushed down to this low. So 85.31. Key weekly level, too. We can take a look at that. There you go. See that? So 85.31. Probably look right there and just go with this nudge right there, which is 85.16. But 85.31 is key. Let's see if they can dip below that and regain it. But I mean, let's just stay with that 85.31. On the upside, though, $85.82. The euro's so weak, and they have that announcement of that finding on the AstraZeneca. I guess there's a chance we could even push beyond that. We'll go with this 85.16 after all. That's a little bit of a stretch, but 85.31 is key. Only because that report's going to be out, and that's going to weigh on that. Let's go and move into the euro odd. We're still sucking wind over here. I'm afraid that we're going to try and take this dip down here. If we do see that, let's go with 53.26 for that potential. If the gun stops, that's where we go down to. That will be resistance, 54.41. And on to the Euro Kiwi. Right there. 64.75. with resistance right there, that body, 66.27. Onto the ASEAN. No changes in the ASEAN. And onto the guppy. We are still pressing it. Look at that. So we did make it to 52, but I like that 52.78 zone here. Maybe we can push up there to that 78. 78 is huge on the weekly. We'll take a look at it. There you go. See? No changes there. They did dip down here towards that 50.50 and they held. I mean, they held at 50.70. So right now, we'd have to go move this up to 50.70. And go to sterling nod. Let's see, we've moved up a little bit higher, so it's going to be 80.36. With support right there, 79.21. That'll do it there. John says the Kiwi is strong on the America Cup win. Interesting. We'll go and take a look at what gold's doing. Still holding up in here in the 1730 area. Got some. It's gonna be key if they can get above that. That's resistance 1737. Take a look at crude oil. Still holding up very well. Look at this. We did see a little bit of a dip yesterday. They recovered nicely. Take a look at a 2-hour chart. Needs to get above that level, 65.49 on a 2-hour close. Looking at copper, we've rebounded a little bit here, not a whole lot. Copper needs to get above 412. Okay, you see that coming across. And take a look at the bonds or 10-year notes. Still sucking wind down here, so we're keeping that pressure on rates. And that'll be it. That'll do it. And thanks for joining us here on the European crossover webinar. Mira said to look at platinum. I can't look at DAX, Mira. I don't get DAX on here. I know it's at all-time highs, but I don't get the DAX on TD Ameritrade. Hold on. I need to take a look at platinum. Well, we've been talking about that 1240, the importance of it. Look, they came up there and tagged it. That was important on the way down, and look on the way back up, 1240. So you got to get above 1240. You can see they faded right against that 1240. And right here, this closing level, as long as they need to hold that 1189. They got below it here. A few days going to pop right back above it. That was key. But resistance right there, 1240. And no, I don't think it, I get the DAX on here. See, nothing, does not show the DAX. There's a DAX product, but not the DAX. See. The DAX index fund. The value index. The performance index. So yeah. Yeah, he said try and do the D30. Well, nope, that's it. Then we'll try this one. Nope. I know that they were supposed to cover the DAX as a product. This is about 3 years ago. And I guess he never got around to covering it or whatever. But unfortunately, they don't have it. But that'll be it. Thanks for joining us in the European crossover webinar, and we'll see you in the chat room. Oh, Ahmed was asking about silver. We can take a quick look at silver. Gone pretty dead on this thing for a while. Hold on. Look at the continuation chart there. It's not going anywhere. For starters, though, it needs to get above 2633 for starters, right? There. You can see that body close, 2633. And the downside is 2564. But it's been pretty quiet overall after all the excitement a few weeks back. Okay, we'll see you in the chat room. Thanks for joining us here. And